Hi guys, Assalamualaikum. Very good morning everyone. Welcome back to our analysis of uh, uh, Tawaruq financing. Now we can go to look at the second product, which is the Islamic personal financing. Earlier we were looking at the Tawaruq property financing. So we got the agreement between the customer and the developer. That is a separate agreement from the agreement between the bank and the customer. So the customer came in to obtain the liquidity to pay off the remaining balance of the sale and purchase agreement. After which, when the customer got the liquidity from the Tawaruq arrangement, then he will pay off the outstanding balance to the developer, and therefore getting over the ownership rights. And then the property will be charged to the facility as part of the Tawaruq financing contract. But now when we go into the Islamic personal financing, we are no longer dealing with the third party, which is the selling party, who was the developer under the property financing facility. So this is a facility providing just cash proceed or liquidity to the customer. And one of the product that we can examine is the CIMB Islamic Express Cash Financing. So you can download it from the CIMB website. So under the product disclosure sheet, you will be able to look at the detail of this product offering. And again, as what we have seen in most of the PDS document, there are about 15 items that must be disclosed by the bank for the product they are offering. And these items include, like what is the product about, what is the Shariah concept applicable, and then what do I get from the product, and what will happen if I were to pay early or settle early. And these are things that would be make transparent to the consumer before they decide to use the product. So this is a very good system accorded by the regulator to ensure that the welfare of the consumer are well protected by having the bank disclose the details about what the customer will be getting. So in this Islamic financing or Islamic personal financing product, as I have mentioned earlier, that the Shariah concept is based on the commodity murabaha contract or Tawaruq. And as mentioned here, a specific Shariah compliant commodity will be identified, and that will be the CPO, crude palm oil, and used as the underlying asset for the sale and purchase transaction between the customer and the bank for the purpose of availing the funds for the financing. So the transaction will be between the bank and the customer. So the bank will buy the CPO from the vendor one using deposit fund, and then the bank, having taken ownership of the CPO, will sell the underlying asset to the customer on credit basis. So the sale price will be based on the facility amount plus the profit margin. So when the customer have gotten the ownership of the CPO, then the customer will then sell the CPO to vendor 2 based on a cash sale, such that the customer will be getting the payment in full. The liquidity that the customer intended to acquire from the arrangement will be gotten from the vendor 2, and therefore that will somehow make it possible for the entire financing arrangement to be realized, and both parties, the bank, will be obtaining or will be recovering the total payment over the duration of the tenure, consisting of the facility amount plus the profit margin, and then the customer will be getting his liquidity on the spot, so that he can go ahead to to do whatever possible with the money he got from this facility. And therefore, we can see here that the profit rate quoted can range from 18% to 24%, depending on how long the customer intend to take the facility. So for a shorter term, it is 18%. For the longer term, it is 24% per annum. And the effective profit rate was also quoted here from 28.88% to 41.70%, because this effective profit rate was calculated based on monthly rest payment, and the profit rate of 18 to 24% were calculated based on yearly rest. That we can go later on and see what can we do to further discuss about the charges. But as for now, what we will see is that this personal financing is available in many other banks, especially in Malaysia for Bank Rakyat. That was the first popular facility offered by Bank Rakyat many years ago for the government servant. And from that modality, many Islamic banks started to emulate Bank Rakyat to focus on personal financing. But for this government servant, because the payment of the debt would be directly taken out from their salary account, so there is some kind of collaboration between the bank and the employer, which is the government sector. So this makes the payment of the debt much more easier for the bank, and that could prevent defaults, because payments are entirely coming from the employer and not from the employee. So for now, okay, let us just stop here. I will continue further, and when we look into in more detail the nature of the Islamic personal financing. Thank you very much. I'll see you again. Assalamualaikum warahmatullahi.